Pavel, welcome back. Happy New Year. Is that if you find a fit that works for you, we're one of the only companies I know that bring people in that they would, most would say, oh, they're your competitors. You might lose a subscriber. Well, you know what? I'm willing to, take that risk. The whole team is because we know what we offer. And also, if you find a place that works for you and you're happy and you learn about it here, we're all for that. Okay. So, just something that makes us stand out. Find another company out there that is willing to promote other people. So, anyway, I'm proud of that model. So, Pavel, welcome back. Happy New Year, buddy. Spreadcharts.com. Pavel Hala is with us.
Yeah, hi Dale. Do
How
you hear
are you?
me?
I got you loud and clear.
Yeah, great. Yeah, thanks
Good
for
to
the
have you.
introduction.
Oh,
Thanks for the introduction, and
yeah. Well,
I'm glad to be back.
yeah, you bring good stuff to the table. That's why we've been talking for a few years. I was looking forward to hearing what strategy you have after, we're going into like new regimes of things and a little changing, although our charts will never change, right?
Yeah,
No matter who the president is, okay?
yeah, and it's often better just to ignore the noise and focus on the data. So I totally agree with you.
And I thought about you when I saw that big deal. Um, China buying a lot of beans, and the beans have found all the grains look like they bottomed to me. I've thought that previously, but what's happening here in California, not far from it, is we haven't had rain. So,
Mhm.
a lot of the Chinese know the difference between El Nino and La Nina. Okay. El Nino bye bye left. Okay. We're in La Nina and it's already showing up in California. We're already like 4 inches below normal. It's
Mhm.
part of the reason. And I've seen La Nina years that lead to the same type of lack of water situation in the grain belt in the fall during the
Mhm.
summer. So, we don't have large carryovers. China's coming in. I don't know if they're doing it. It was huge, buying beans, maybe to do it before tariffs set in.
Mhm.
But anyway, I think that this is going to be the year of food. Um, all the fertilizer stocks, ag stocks were really a lot of call buying going on there yesterday and
Mhm.
stocks moving. So it's agriculture's turn, I think, especially if we ever get a turn in the dollar back to the downside.
Yeah, that's a cool insight. I was thinking about the same topic a few weeks ago, whether it's more of a weather related or the Chinese panic buying before Trump's
Yeah,
goes into office, and uh,
yeah.
eggs and especially grains like soybeans will become politicized again with Trump. So there will be some volatility. That's for sure.
Okay, buddy. So what's top of mind as we look into 2025? What's your work pointing to here? And you
Yeah,
can
so let's.
share the screen
Yeah, by the way, where do you share the screen looks somewhat
at the
different.
bottom, still
At the
at the bottom.
bottom, there is Q&A. Uh, sure, because I don't use Zoom often, and it looks somewhat differently.
Huh. On the bottom, do you see all the icons where
There
you
is chat,
share?
raise hand.
Yeah,
Uh,
next to raise hand, share.
Raise hand. There's just chat and Q&A. I don't see any screen sharing over here.
Yeah, okay. Let me try this. I'm going to share, and then I'm going to stop
Yeah, I
sharing.
see your screen, but
Okay, and now
don't
I
see
stopped sharing. Try it again.
I don't see sorry, there will be some settings over here.
Oh
hopefully.
yeah, you're not promoted. Okay. Thank you, Mandy.
Uh-huh.
Okay.
Okay,
Okay.
so
I didn't promote you to president of.
okay, so
I
it's
tell you what, the trading community would be lost
yeah, now
without
now that's
without Mandy.
yeah,
All
thank you.
right.
So
Thanks,
I'm
Mandy.
glad it was not a fault on my part. So okay.
The screen looks. Yeah. I don't
Because
know.
I'm really not using this
I'm real
very
high
often.
tech, Mandy. Real high tech.
Okay, so here we go.
All right. Copper.
Um, yeah, do you see my screen? Yes, you
Yeah, I
should
do.
see.
It's up there.
Okay, so today I'm gonna talk about crude oil because I think the opinion I'm gonna present here will be somewhat controversial. Uh, First of all, for a little context, in specifically in October 2020, I turned mega bullish crude oil. We told our subscribers in our platform through the research here in the app. You can find a video from October 2020 that energy is the opportunity of this decade, the best opportunity of this decade. And I think the move in energy is just starting, and there will be a follow through to what we saw in 2022. That said, I turned bearish crude oil in the first quarter of 2022, at the beginning of 2022. My timing was not precise, I have to admit it. Well, not as much in time as in price, because the final leg higher was just crazy.
Yeah.
But I would say that the price stopped soon after, and overall, this was a right call because the price has been moving lower ever since. And right now we are, and by the way, we are looking at Brent futures. I have a WTI below, but I think Brent is more important benchmark, especially if you are interested in international prices in the global market, not just the US. And right now we are at an interesting point because it seems that crude oil is trying to break out, and many people are turning bullish and anticipating resumption of the uptrend, or they think that the resumption of the uptrend is imminent. And I think that's wrong. I think this is a risky call because, as I said, I'm long-term bullish energy, but I think the conditions are not ready right now. The reason I
What are the conditions that tell you the market's wrong-footed?
Well, because the reason for turning bearish at the beginning of 2022 is still valid. Back then, the situation with the dollar and rates was that if the dollar and rates go down, then that would increase the recession risk. I mean, the likelihood that the recession is imminent in the US, and that would be bad for crude oil. On the other hand, if the rates and the dollar go up, and if this uptrend crosses a certain threshold, then despite the strong economy and strong demand on the US, this strong dollar and high rates would basically crush the rest of the world, the economies of the rest of the world, especially the emerging markets. And that would in turn crush demand for crude oil. I mean, global demand for crude oil. So this was a difficult environment for crude oil because uh, you needed a certain, you needed the rates and the dollar to move into a certain narrow range for the oil market to be just fine. And that was not a good environment for any major bull run. What we got was just a sideways price action and generally a drift lower. And I think these conditions are still present. Right now, we are once again witnessing dollar surging higher and rates going up. And I still think these two effects will eventually crush emerging markets economies unless they turn lower. And if they turn lower, then there has to be some reason for them to turn lower. And one such reason could be the US recession, or at least rising likelihood of US recession. And then once again would be negative for crude. So this is a difficult environment for crude. And I was thinking about it a few days ago,
Because
and
the
I
technicians are calling it a breakout. So, I heard Steve say it, um, I don't know where the breakout level is. I'd have to look at my chart, but this recent push, I think, yeah, on that
Mhm.
move when there were more sanctions put on Russian oil, that's what triggered it. Um, that move from 76 to 81. So, what do you see technically there? That maybe this is just a correction. We'll peak out here between here and 82 and then start heading
Yeah,
lower.
yeah. I mean, my call is for an imminent peak in crude oil and move much lower. I think we will make a lower low on crude oil. Once again, this is a risky
It's
proposition, and
gutsy. I like it. Okay, so
I
how do
might
you
be.
how do you manage the risk on a bearish WTI? Because that is contrarian here.
Yeah, I think the most obvious way how to trade this would be through options, through either better call spreads or on
Okay,
the put side through options, to limit the risk. Although the volatility has increased a bit,
so
so maybe
options are
the
more expensive. You have
so
to
yeah, so maybe the
write
Berkel's
something.
yeah, Berkel spreads might be a good way to catch both the higher implied volatility and some downside on the price itself.
Yep.
But that would be the strategy. But I want to go back to the thesis itself. And I mean, I have two charts that will explain my logic. The first one is this one. And by the way, I already, or our premium subscribers already saw this chart in the New Year's Outlook. And this is the chart where in the middle is the inverse chart of the offshore renminbi futures. It's inverted because the contract itself is basically the USDCNH. So when I invert the
Yeah.
price, it means that when the curve goes up, the value of the Chinese currency increases. And above is the copper futures, and below on the bottom subchart is the WTI crude oil. And I highlighted two periods when the Chinese currency, the renminbi, was very strong. And if you compare the same periods on copper above and crude oil, you can see that this strength in Chinese renminbi perfectly corresponds to the
Yeah.
bull markets in crude oil. And
Mhm.
let's take a look at what is the Chinese yuan, or basically the Chinese currency, doing right now. And it is not encouraging at all. It's basically testing the
Yeah.
lows, and maybe there will be a breakdown, maybe not, who knows. But this is definitely not a sign of strength. And the logic behind this chart is really simple. When the Chinese currency is strong, then the Chinese economy is strong. There is no need to intervene, devalue the yuan, or do anything like that. And that's the best environment for cyclical commodities like crude oil or copper. And right now, the move in the Chinese currency goes against the move in copper and both crude oil. So that's one side of the things. You know what I told you when I said that the rising dollar and U.S. rates crush global demand for cyclical commodities like crude oil. So this is basically this phenomenon visualized through simple charts. So that's one thing.
Okay.
The second thing, the second phenomenon is that I said in 2022, I guess, that there is a very low chance of a sustained bull market in crude oil without strong demand for products in the US. And the best way, or maybe the simplest way to measure this demand for products is by using these crack spreads like this one here, because sometimes the gasoline is stronger, sometimes it's diesel, like right now, for example. But overall,
Heating
this,
oil,
yeah,
heating
yeah,
oil.
exactly. So overall, this is the a balanced way how to measure this demand for products. And despite the breakout on crude oil, these crack spreads are still heading lower, making lower lows, and so on. So there is no strong demand for products in the US. So we have US dollar crushing and US rates crushing global demand for energy, and
Mm.
we have weak demand for products in the US. And this is not an environment that's conducive for a major bull market in crude oil. So these are two important reasons why I think this breakout in crude oil is false, and it will fail, and the price will move much lower and make a lower low. So
Yeah, getting back under 75 would be negative.
yeah, let's get back to Brand. So we speak about the same thing, and I think when I zoom out, uh, I
Well,
think
I have a line in WTI. It's on a weekly chart that
mhm.
had, I've been looking for 62 for a year.
I know. I saw that
Oh,
on
okay.
Twitter or X or
Okay.
whatever.
Yeah, whatever
uh,
it is.
I
Yeah.
remember your call, and I don't have any specific target in mind, because, in my opinion, it's very hard to guess an exact price a year in advance or many months in advance. I always prefer to look at the current market conditions, but I think we will get a
Well,
breakdown on.
you need to learn to draw lines that are magnets.
I know, but it's.
Magnetic lines,
Yeah, I
man.
know, but let's say that
Uh,
it is just very subjective. There are
I
many
know.
ways where to draw these lines, and everybody has a different opinion where that or this line should be. So I always prefer to stick to the current market data. But let's say I was thinking a few days about this, and I told myself that uh, imagine that we have a recession soon in the US. I am not saying that we will. Uh, just imagine that we have a recession starting a few weeks from now. What do you think crude oil does in the current supply demand environment? And I think you will agree with me that in such a scenario, crude oil will be totally crushed. Okay.
Okay.
And when the time comes when I will once again go all in to energy like I did in October 2020, I I think the environment should be such that when I think about the potential recession in the US, then I would say, the supply demand in crude oil is so tight that maybe the price will just drift lower or stay sideways. And that's exactly the time when I will start buying energy in size. And I'm not saying that there will be a recession, or there has to be a recession. It's not about the recession likelihood. It's about the supply demand situation from the global perspective. And when you take, OPEC spare capacity and US shale into account, I think there is no doubt that the supply demand conditions are not ready, for such a bull market. You need price and time to act on crude oil market. So you need reduction in OPEC spare capacity. You need some cracks in US shale output, these problems that everybody is talking about for and has been talking about for years. Maybe some of that to start showing up in the data. And only once we see these fundamental shifts, then I think the conditions will be ripe for turnaround in crude oil. And basically, we need lower prices to achieve that. Lower prices over a sustained period of time to get this turnaround. And we are not there yet, simply said.
All right, really interesting contrarian call. I don't, I mean, to me, with recent action and insightful. And I look at that 70 area on that chart.
Hmm.
There'll be a panic under 70. Look how many tests. It's been
Yeah,
holding for a year. And then you look left, man, that's important.
yeah,
So,
that can
yeah,
be crazy. I mean, this
yeah,
is a medium term call because
yeah,
in the short term there are some, tailwinds
positive
for crude oil,
seasonals.
like the
Yeah,
strong seasonality. But I would not trust seasonality in the current environment. But
okay,
I have to admit this is a tailwind for crude oil. On the other hand, I also watch the contango or specifically backwardation in this case on the
yeah,
mid part of the curve, not on the front end, which is the most common way to or most common way to visualize this. But I think it's very noisy and susceptible to speculative flows. So I prefer to take a look at the middle part of the curve, in this case, the backwardation between the fourth and the seventh contract in Brent. And
yeah.
we are approaching 3% backwardation on this part of the curve, which is
Mhm.
above the normal range over the past 2 years. So the crude oil is getting stretched
Yeah,
from this perspective. Here is the chart of the crude oil itself
yeah,
compared to the backwardation. You can see that they are positively correlated. And even if we take a look at, for example, the past 20 years, which roughly corresponds to the shale era, well, the impact on the market only started in or after the GFC, but the technology itself was or had started to have a meaningful impact roughly 20 years ago. And you can see that once again, we are currently approaching 3% backwardation, which is above the 95th percentile over the past 20 years. So even from this perspective, this metric is telling us that the crude oil market is stretched, and unless this is really the beginning of a new bull market or resumption of the bull market, then it is very likely this will mean revert and move back towards zero. Uh, so that's one additional thing I'm watching right now. But the two most important charts, as I said, is the Chinese economy measured
yeah.
by Chinese yields. The
All right.
Chinese
What?
yields are tanking, and
Yeah.
in effect the
They're
Chinese
letting it
currency.
go, aren't they? They're letting it go.
Yeah, there's
People
basically.
were always worried about China just letting it go, the yuan go.
Yes, they definitely have deflation in China, and it's not exactly a free market economy. So the manifestations of their economic problems are different than they would be here in the US. But the currency data and the yields, they don't lie. So they definitely have huge problems with their economy. And of course, they can stimulate, they can, push a major stimulus tomorrow. You never know. But if they do, the Chinese currency would go even lower, in my opinion, because they would have to devalue. And once again, that would not be positive for these cyclical
Oil.
commodities. There could be a
Yeah.
short-term rally, of course, but in the medium term, as you can see on this chart, you only got uh, rallies or bull markets in cyclical commodities when the Chinese yuan was strong, which means that the Chinese economy was
Right.
strong fundamentally, not by
Right.
some money printing spree. So that's one thing, and the
So
second.
you would also mistrust this copper rally too, then.
Yeah, for sure. And by the
Okay.
way, last time we no, it was not with you. It was with
Yeah,
Blake.
Blake. Yeah.
I remember it was here in this consolidation at the beginning of October, and I was bearish copper. You can find the video. Everyone can find the video on your YouTube
I
archive,
I believe
and
you.
yeah, and it played quite nicely
Nice.
because. because of the same because the same
All right.
things and the same phenomenons are I described today, and I think they are still in play. When you look at the chart of the Chinese renminbi,
Yeah.
it's still heading lower, and so yes, I think the copper will most likely move lower too. But that's I think
Okay.
the risk reward actually the copper market is quite washed out, and we also have I guess a long signal in our by our machine learning model. So I would not short copper here. Maybe it can move higher in the
Buy
short
a
term.
break. Buy a
Yeah.
break.
So I would avoid copper here. I'm not wanna say that I'm bearish copper. I'm saying that I'm bearish crude oil. So
Okay.
that's
You're
that's that's it.
I'd call you strongly neutral on copper.
Yes. Yeah. So,
Uh,
but once again, this is a risky call. I might be wrong, and but
you
that's what the data
you want to hear
shows right
some
now.
CNBC analysis? Leave that chart up. Okay.
Hmm.
Copper could be very constructive should it move up to trade to 450, unless it declines first under 420. But if it does that and then recovers, it could go higher unless
Hmm.
that fails, and then I'd look for lower.
Yeah, that's very
Huh? What do
yeah.
you think? Is that actionable?
No, that's not actionable at all. And I have uh
For your broker, it would be.
yeah, I prefer to watch intra-delivery copper spreads for short-term
Yeah.
timing. They could be very helpful. And yeah, there was a bounce in these copper spreads, but they have turned down yesterday. So I don't know. This is inconclusive. I
Okay.
don't have an
Uh,
opinion. There,
I know your convictions on WTI here.
yeah,
All right, so people want to follow you and how you're managing or confirming price action going forward here on this trade. How do they follow you?
okay, so they can go to our website to spreadcharts.com and here we go, I hope. Yes.
There it is.
And they can sign up for our software, which also, I mean, the software, it's not just software, it's also the signals by our machine learning model, which are not trading signals, they are just for, notification that there is something interesting happening in this market or that. And there's also the premium research I just mentioned, which you can also find in the app. So it's all there. You can sign up, and yeah, I think this will be a pretty interesting trading environment. I think the best opportunities in the coming months are elsewhere. This is something we revealed in our New Year's outlook. I actually see three interesting opportunities. Two of them are certain sectors or industries in the stock market outside commodities. And yeah, so you can sign
Yeah,
up
check it
and
out.
watch our New Year's outlook and find out where we do see opportunities. And as I said, I don't think there is an opportunity in energy right now. Not just yet. Not just yet. Let's
Okay,
say.
so here's my takeaway, and it's a nice tagline you could use. Don't let oil be your foil. All right, so really appreciate your great work, Pavel,
Thanks, Dale,
and
and
good to talk to you. And I hope you and your family and your subscribers all have a great year, and that pips just run you down like a tsunami.
yeah, thanks, Dale, and
All right,
I
man.
wish you the best too.
All right. Pavel Holla, everybody. Great work. Follow him. No risk on trying that, trying the software out, and very reasonable price. So that's a wrap. Don't just count your oil barrels, count your blessings. See everybody tomorrow. Oil can foil your trades. You like that? Okay.
Yes, cool tagline.
Yeah, by Pavel Hala. All right, everyone. You could join the team in about 13 minutes on the Morning Edge. Thank you, Pavel. And thank you, everyone, for hanging out with us. See you tomorrow. Adios. Thanks again, bro.
Yeah, thanks, Dale. Bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.